Hey there, crypto enthusiasts! Welcome to an exciting update that's sending shockwaves through the crypto world. The SEC has just given the green light to a spot Bitcoin ETF in the USA. In this video, we're diving deep into the world of Bitcoin ETFs, breaking down how they work, why you should be thrilled about this development, and what it means for all you savvy crypto traders out there. So stick around because at the end of this video, I have a bonus for you. You'll not only be the go-to expert on BTC ETFs, but you'll also be the one who understands the most incredible potential they hold, especially as we approach what could be a legendary bull run. But before we jump into the ETF excitement, a quick intro for those who might still be getting acquainted with the wonders of Bitcoin. Click on the video up there for an in-depth crash course. Now, for the quick learners, here's the scoop in 20 words. Bitcoin is a digital gold, scarce, because it's never going to be 21 million in quantity, decentralized, and valuable. It's the internet's currency, a global, trustless treasure. Simple as that. Now guys, let's understand what Bitcoin ETFs are. Imagine Bitcoin as a hidden treasure in a vast landscape, containing a limited 21 million pieces of gold. Got the mental image? Great! Now, think of Bitcoin ETFs as an enchanted mirror that magically reflects the treasure's worth without dealing with all the keys and complexities. In this analogy, the treasure chest is Bitcoin, the decentralized digital gold. Bitcoin ETFs act like mirrors, giving investors a way to indirectly tap into and benefit from the treasure inside. Instead of diving into the intricacies of owning and securing Bitcoin directly on crypto exchanges, investors hold a certificate or share in the form of ETFs. It's like possessing a mystical artifact representing a slice of that treasure. Just as the mirror reveals the treasure's value without physically interacting with it, Bitcoin ETFs let investors ride the potential gains of Bitcoin's value without the hassle of direct ownership. Picture it as having a parchment that entitles you to a share of the treasure's wealth without dealing with the challenges of safeguarding the chest and its keys. In simpler terms, Bitcoin ETFs are your regulated golden ticket to mirroring Bitcoin's value. When you buy shares, it's like snagging a certificate for digital treasure, offering you indirect access without wrestling with the complexities of Bitcoin ownership. So guys, buckle up, because the world of crypto just got even more thrilling with the arrival of Bitcoin ETFs. Now that we are clear about what Bitcoin ETFs are, let's understand how it works. Bitcoin ETFs come in two main flavors, spot and futures. Don't be confused, I'll break down each one into little bite pieces. Spot Bitcoin ETFs are investment vehicles that hold actual Bitcoins as their primary asset. In this scenario, the term spot refers to the current or spot price of Bitcoin in the market. These ETFs operate by directly owning and securing real Bitcoins, similar to having a physical asset like gold. Imagine Bitcoin as a shining object casting its shadow. The spot Bitcoin ETF is like the shadow, closely mirroring every move of its source. The ETF essentially reflects the real-time market price of Bitcoin. So if the price of Bitcoin rises, the value of the spot Bitcoin ETF shares tend to follow, providing investors with a direct, proportional link to the cryptocurrency's market performance. Now, picture a traditional stock exchange, such as NYSE, the New York Stock Exchange, or the NASDAQ, which is the National Association of Securities Dealers Automated Quotations, or the TSX, the Toronto Stock Exchange, which is the largest stock exchange in Canada, as the bustling marketplace where these spot Bitcoins ETFs are traded. Much like buying and selling stocks on these exchanges, investors can buy or sell shares of a spot Bitcoin ETF on these exchanges as well. This accessibility to traditional stock exchanges introduces a touch of mainstream familiarity, making it easier for investors like your dad and mom, or maybe your grandpa to engage with these ETFs compared to navigating specialized crypto platforms. because of course these are the platforms they are familiar with. Now, let's take a look at Bitcoin's futures ETFs. Bitcoin futures ETFs don't hold actual Bitcoin, but use Bitcoin futures contracts to give you exposure to the price movements of the digital asset. A Bitcoin futures contract allows you to speculate on the future price of Bitcoin without owning the underlying asset. However, the prices of Bitcoin futures contracts don't track the price of Bitcoin exactly, resulting in a price differential between actual Bitcoin and holding shares on a Bitcoin futures-based ETF. Now, to make it very plain and simple for everyone watching this video, the approved ETF is the spot Bitcoin ETFs. Which takes us to our third point. Why the hell should you care? Well, for one, regulatory approval. One significant advantage is the regulatory approval that comes with Bitcoin ETFs. These investment vehicles play by the rules, making them attractive even to institutional investors bound by strict regulations. As the anticipated spot Bitcoin ETF gets the green light in the US, we should brace up for an influx of institutional money into the crypto space. And that includes your dads and your grandpas. Secondly, accessibility. Bitcoin ETFs makes entering the crypto market a walk in the park. Unlike grappling with crypto wallets and private keys, you can easily access Bitcoin ETFs through traditional online brokerage accounts. This newfound accessibility is like opening a door to a new world of digital assets for a broader range of retail investors. And lastly, no crypto custody hassle. Forget about the complexities of self-custody in the crypto space. With Bitcoin ETFs, you let the fund handle the custody of assets. It's like having a reliable babysitter for your crypto investments, minus the worries of losing access to your funds. I mean, many people have lost their wallet keys, so it's not even funny. With these 3 points in mind, it leads us to, what does this really mean for crypto traders? Don't worry, if you are a Forex trader, this is very important for you as well. And if you don't trade at all, you still need to listen up. Who knows, maybe this might catch your fancy. With the approval of Bitcoin ETFs, institutional investors, long-lasting guardians of traditional finance, may soon welcome Bitcoin into their portfolios, marking a pivotal moment in crypto adoption. Additionally, the ease of access provided by Bitcoin ETFs could bridge the gap between the crypto-savvy and those still on the fence. The combination of regulatory compliance and simplicity might just be the winning formula that propels Bitcoin further into the financial mainstream. So now guys, do I need to spell it out? And with the Bitcoin halving on the horizon this year around April, there might be an opportunity for those with diamond hands. But hey, this is not financial advice. So, to end on this high note, this is a big win for the crypto industry as investors in the US now have greater access to a new Bitcoin investment product. It also helps people that the SEC has explicitly proved crypto to be incorporated into traditional capital markets, which is a contrast to other countries like China who are continuing their crackdown on cryptocurrencies. Therefore, one might assume that a Bitcoin ETF translates into up only, but the reality is far more complicated than that. To do a quick recap, you have learned about what Bitcoin ETFs are, how it works, why everyone should care, and how it impacts the financial trading market. If you found this guide helpful, give it a thumbs up, share it with your fellow finance and crypto enthusiasts, and don't forget to subscribe for more interesting videos. Stay curious, keep learning, and here's to the exciting future of Bitcoin ETFs. Hey there, crypto enthusiasts!